If buying a house in 2026 were a Tinder date, it would be the guy who demands you pay for a five-star dinner, steals your wallet in the bathroom, and leaves you stranded with the check while telling you it's an investment in your future. I was the girl with the pristine Pinterest boards, the pre-approval letter in hand, actively bidding $100,000 over asking price on a house that smelled like wet dog and desperation. I thought I was securing my financial future. Instead, I was about to walk into the greatest wealth extraction trap ever designed by the modern financial system. Your parents, your real estate agent, and your financial advisor are all parroting the same outdated script. Renting is throwing money away. Real estate always goes up. Get your foot in the door. But they're fundamentally ignoring the math of what has actually happened to the housing market in 2026. In this video, I'm going to show you exactly why the modern housing market is a mathematically engineered lie designed to keep the middle class working until they die. By the end of this video, you'll understand the exact machinery that wants you house poor, stressed, and trapped in a 30-year financial prison, and exactly how to escape it without sacrificing your quality of life. 3 years ago, my husband and I were exactly where you might be right now. We were the classic high-income, zero-wealth couple. We made six figures, followed all the rules, and thought buying a $750,000 starter home at an 8% interest rate was our ticket to the middle-class dream. We nearly signed our lives away. But the night before we wired our entire life savings for the down payment, my husband ran the actual amortization math. We realized we weren't buying a house, we were buying a very expensive, very illiquid job. We backed out, completely changed our strategy, and today we have completely decoupled our wealth from the traditional real estate matrix. Let's start with the math, because the math does not care about your feelings. And it certainly doesn't care about your real estate agent's commission. We need to talk about the affordability illusion. Look at the data. In 1990, the median home cost about 3 times the median household income. You could literally pay off a house in a decade if you hustled. Today, in 2026, the median home costs nearly 8 times the median household income. But here's what they don't tell you. The purchase price isn't the trap. The trap is the cost of capital and the hidden friction costs. Let's say you magically find a decent home for $500,000 today. You put 20% down, that's $100,000 of your hard-earned, post-tax cash that is now locked in a brick box. You finance the remaining $400,000 at a 2026 average rate of, let's say, 7.5%. Do you know what that actually costs? Over 30 years, you aren't paying $500,000 for that house. You are paying over $1,000 in interest alone. Add in property taxes, which are skyrocketing because local governments are broke. Add in maintenance, which historically averages 1 to 2% of the home's value per year. Add in insurance, which in states like Florida and California has literally doubled or tripled since 2023. For the first 10 years of your mortgage, over 80% of your monthly payment goes straight into the bank's pocket. You are not building equity. You are renting money from the bank, and you are taking on 100% of the liability for the property. When the roof caves in, the bank doesn't send a guy, you do. And here's the kicker. This isn't an accident. This is the exact business model of the American financial system. We have to expose the machinery here. Who profits from the lie that everyone must own a home? First, the banks. They get a guaranteed government-backed yield off your labor for 3 decades. Second, the local governments. They get a continuously appreciating tax base without having to provide significantly better services. And third, and most terrifyingly for us in 2026, institutional investors. Wall Street realized something a few years ago. Why gamble on the stock market when you can just buy up the fundamental human need for shelter? Firms like Invitation Homes and massive private equity funds have spent the last 5 years vacuuming up starter homes. They pay in cash. They don't care about 8% interest rates. They're turning the American suburb into a company town. They want you bidding against a billion-dollar algorithm. They want you stretching your budget to the absolute breaking point so you have to keep your soul-crushing 9-to-5 job just to make the mortgage payment. Because a stressed, house-poor employee is an obedient employee. The American dream of homeownership has been weaponized into the ultimate tool for labor compliance. But wait, it gets worse. Let me show you the graveyard of people who ignored this math. Think about the folks who bought at the peak of the frenzy in 2022, 2023, or even early 2024. They waived inspections, they bid 50K over asking, they thought, we'll just refinance when rates go down. Well, welcome to 2026. Inflation proved stickier than a spilled soda on a movie theater floor. Rates didn't go back to 3%. Now, these people are trapped. They have a mortgage payment that eats half of their take-home pay. They can't move for a better job opportunity because they're underwater on their equity after paying 6% in realtor fees to sell, and they are experiencing what I call the lifestyle industrial complex. When you are house poor, you have zero liquidity. If you lose your job, you have maybe 2 months before the bank takes your home. You can't take risks, you can't start a business, you can't invest heavily in asymmetric opportunities. You are completely paralyzed by the anchor of your asset. So here is my controversial take that goes against 99% of traditional finance advice, Dave Ramsey, and your boomer uncle at Thanksgiving. Renting is not throwing money away. Renting is buying the most valuable asset in the modern economy: maximum flexibility and pure liquidity. People love to say, my landlord made $400,000 in equity while I paid his mortgage. Yeah, maybe from 2010 to 2021, but the math has inverted. In 70% of major U.S. markets right now, it is significantly cheaper to rent an identical house than it is to buy it. I'm talking a difference of $1,500 to $2,500 in pure cash outflow. But before I reveal the most important step, the exact strategy that my husband and I used to turn renting into a multi-million-dollar wealth-building machine, rather than just lining a landlord's pockets, you need to understand the psychology of why you feel like a failure for not owning a home. You have been marketed to since birth. The media, the government, the culture, they all tie your self-worth as an adult to a property deed. You feel like a grown-up when you get the keys. But let me ask you, does a grown-up put themselves in a position where one missed paycheck means losing everything? The real grown-up move is looking up the matrix, seeing the code, and choosing not to play their game. So how do we escape? How do we win by not playing? We do what the wealthy do. We separate our housing from our investments. Step 1, embrace the renter's arbitrage. Find a rental in a neighborhood you love. Let the landlord take the 7.5% interest rate hit. Let the landlord replace the $15,000 HVAC system when it blows up in August. Let the landlord pay the skyrocketing property taxes. You cap your housing cost exactly at your lease amount. Step 2, you must invest the difference. This is where 99% of renters fail, and where the renting is throwing money away myth comes from. If renting saves you $1,500 a month compared to buying that same house, you cannot spend that $1,500 on a car lease and DoorDash. You must violently invest that spread. Put it into income-producing assets, dividend stocks, REITs, start a digital business. You want assets that pay you to hold them, not assets that you have to pay to maintain. When you invest that difference, your liquid net worth will drastically outpace the dead equity of the homeowner, especially in a high interest rate environment. Step 3, maintain ultimate mobility. The economy of the late 2020s is volatile. Companies are restructuring, AI is shifting entire industries. The people who will survive and thrive are the ones who can tack up and move to where the capital is flowing within 30 days. You cannot do that if you have to stage a home, find a buyer, and pray the appraisal comes through. Let's recap. The 2026 housing market is a mathematically broken system designed to extract your wealth through interest, taxes, and maintenance, locking you into a lifetime of labor. Wall Street is buying up the inventory to ensure you stay a renter, but they want you to feel bad about it so you eventually break and buy their overpriced inventory. But now you see the machinery. You don't have to participate. You can rent for flexibility, invest the massive difference, and build true liquid wealth that nobody can foreclose on. It is not an American dream. It is a financial product. Treat it like one. If this video helps you see the matrix and save yourself from a 30-year mistake, hit the like button and subscribe. It tells the algorithm that we're waking up.